Gordon Kwan, Mirae Asset's Regional Energy Research Head. He joins us on the line. Mirae, by the way, has a buy call on Sinopec. Gordon, good to have you with us this morning. What are your thoughts on the Angola acquisition? It must be a positive for the company, correct?
Yeah, I think it's just the tip of the iceberg in terms of getting upstream assets from the parent company, which has a wealth of oil and gas fields around the world. And I think this would better position the company in terms of having higher operating margin compared to the existing domestic refining business.
Does it mean that you're one step closer to raising your earnings forecast for the company?
There are some concerns. Like I said, this is a long-term positive. In the short term, they are still predominantly a refining company. And in 2010, there are a lot of challenges in domestic refining, including overcapacity as well as government pricing that is below market. So at this point, we are not immediately raising our earnings forecast just yet. But in the long term, the Angolan asset injection is very, very powerful.
What then would you like the company to do at this point in time to address the concerns that you just mentioned?
I think there are two things that this company can do better, and that is, number one, to have more capex deployed toward the upstream E&P, which yields a higher return on capital. And secondly, to continue to lobby the government for more timely refined product prices increases. Otherwise, they would be crucified if oil prices continue to go up and they cannot raise prices at home.
Gordon, it does look like Chinese companies are no longer content with becoming just national players. They want to make a mark internationally as well. What are your thoughts on this? How successful will they be?
Well, you don't want to put all eggs in one basket, and that's why you want to diversify your exploration effort. So besides looking for oil and gas fields at home, they also need to take into consideration the potential of the North African, West African, Caspian Sea, Latin American assets, just to diversify their geological risk. And also, they appear to be finding more natural gas fields at home. So in order to get more oil assets, they definitely need to go overseas.
You talked to... Go ahead.
Yeah, and there are a lot of oil and gas reserves out there that are still selling at below peak valuations. So this is definitely the time to take advantage of oil prices having collapsed 50% from their peak.
Earlier, you talked about overcapacity, the threat in the global refining market. Put that in perspective for us. How serious is this threat?
Well, the world is still in slow growth mode, after coming out from a recession. So the demand for gasoline and diesel is still very sluggish. I mean, the only growth market is China. But the problem is that the growth in China is also being offset by basically, declining consumption in U.S. and Europe. On the other hand, capacity-wise, is growing at 12% per year. With new plants in China, India, and other emerging markets, you have the potential of capacity growth overwhelming demand growth, and that could put pressure on refining margins.
Gordon, quickly, I want to touch on PetroChina. I mean, the deal amounts to about, what, $6 billion every year? That's pretty significant for any oil company, correct?
Definitely, yeah. But, I think PetroChina could swallow this quite comfortably because their market cap is over $200 billion.
All right. Gordon Kwan, thank you so much for that. Gordon Kwan, Mirae Asset's Regional Energy Research Head.